All right, this is Adaptimmune Therapeutics, ADAP. We have some nice signs of accumulation. There's broadening base of support. I like that we actually had this, occurrence here where demand exceeded supply. This pullback here didn't result in a new low. Gross increase in volume, creating a nice little spring. We rally away. So right now, presently, we have a nice healthy pullback. This looks like a nice little bull flag. I think that an entry here would kind of assume some risk, but we have a defined level of support. I like a long entry above $5.40 with the intent of trading into the objectives of $7.20 and $8.20. So if prices were to break down below $5.20, I would just say get stopped out, save your money, and shop for an entry a little bit lower, around $4.80 or $4.60 on the 50-day simple moving average. But I think that this is a good trade to start to look for entries along this expanding base of support with the intent of trading into these upper price objectives. All right, this is Abercrombie and Finch, ANF. So I do like that it's re-achieved its 50-day simple moving average. I like even more that we're seeing the sector break out and is break resistance. We do have some nice consolidation along a nice base of support. We're seeing some participation off lows. It shows me that there's still some demand here. The price objectives that we have are $14 and $18. I think you have to be bullish here above $11. Anything below $10.50, I say stop out. I'm still biased to accumulation, but I wouldn't hold on to the risk. I would just look for entries along support. What I see playing out is breaking out of this resistance, transitioning to phase D, which is a markup inside the range, potentially hit this $14, $14.50 target on the 200-day simple moving average. I then would see a pullback. So you can either try to catch and trade this into here, or you can let this actually break, show a sign of strength, and then buy the dip around $12.50 or $13 with the anticipation of it trading $18. This is Genworth Financial, GNW. So there's a couple things I like. The first is very obvious, and that's the simple fact that it's consolidating above its 50-day and 200-day simple moving average. The next that I do like is that it looks like we've broken out of this range and we're converting prior resistance as support. But something else is interesting. Demand actually exceeded supply. We had a new high here, and although we rejected it very bearishly. We can appreciate there's no selling, there's no supply, there's no weak hands. The next is that now we're starting to drift higher here, and it looks like prices are actually contracting, or volumes contracting. That would be bearish. But it looks like in these circumstances, I might suggest that just means that prices are going up with increased ease. Although the price spreads are narrow, it might mean that there's just no sellers that's there. Given that the consolidation has been very tight, you have to be bullish this above 390. I think this is an easy trade. And you stay long above 390 or 380, and your price objective is $5. This is a daily chart of gap, symbols GPS. So this is accumulation, at least it looks like it to me. We do have some nice demand that resulted in prices breaking out of this consolidation range. We have our price objectives of $27 and $30 respectively. We have some participation here at the sector, so certainly watch XRT. Make sure that it stays above this level of resistance here. How do you trade this? I mean, because what's happening now is that if you've missed an entry along here, you're chasing it. There really is no kind of clear answer. I think that there's certainly some risk. Your risk is $24.50. So with that said, either you have to be comfortable holding on to this and getting stopped out, I don't know, below 23 at $23.50, or just order a smaller position and anticipate smaller profits. There's no reason to stress over it. I might just take a quarter position as it trades into 27, maybe take some profits, and then as it pulls back along this new ascending channel that's forming. So here's the lower trend line. As it offers you an entry along this lower trend line, I might increase my position with the anticipation of it trading into $30. All right, this is in Siegel Corp, INSG. I think this is a very attractive chart. I do appreciate that we, on this last little drop, that we saw that volumes contracting. I like that we see some, on the up days, the upswings, that we see it with increased ease of upward movement, very wide ranging, and supply kind of is contracting as the price spreads are narrowing here. The time spent in consolidation gives us the price target of $3.10. This is a lower liquidity chart. So look, we're not looking for home runs. We're looking for, for base hits. And if this just happens to be a pretty big percentage gain, that's great. But if we can get 5, 10, 15, 30% repetitively, that's excellent. So, recognize that it has there's not a lot of shares traded. Keep your position small and just take what the market can give you. But this looks like a great chart. All right, this is MITK Systems, MITK. Again, another lower liquidity stock. I don't know how come my screener pulled all these up, but they're great looking charts. What we've seen here is some reaccumulation. We definitely saw some accumulation along the 50-day simple moving average, and we recently reachieved the 200-day simple moving average. This looks like a jump across the creek. We're jumping through this level of resistance with increased ease of upward movement, with participation here off lows, expanding volume, and now we're kind of creating a bear flag. Kind of a difficult trade to chase, but I think it's easy to be long this stock and just buy the 200-day simple moving average. If it were to lose 640, or even 660, I might stop out and just look for a lower entry. But I think this is an easy trade. You buy this, you stop out underneath the 200-day simple moving average. Your price objectives are $8 and $13. Pretty good upside here. Okay, so this is a daily chart of, I think it's PSVita, PSDV. We can see that there's a gross kind of expanding the base of support here along the 50-day simple moving average. And even, we have these narrowing price spreads. There's no participation. This looks like this might be phase C, and that we may actually rally up and transition to phase D, which is markup inside the range. What I really find attractive here is that on these up days that have been highlighted by the stars, that they've happened in the presence of a lot of volume here. So this can kind of go two ways. This could be some distribution and prices could break down, but this really could be very rewarding trade. We have price objectives of $2.50 and $3.20. I think this is very easy to be bullish and just be long above $1.65. And if it breaks, $1.60, $1.50, you just go ahead and take your losses and stop out. Definitely has a good risk reward here. Keep it on your list. Consider it for a trade. Good luck.